Alrighty, we're going to be reviewing Monday's choppy price action. So first of all, this is our 9:30 opening. All right, let's go to the hour. Let's take a look at what's going on here. So what do we do with Sunday open? This was Sunday open. You can see that we left this NWOG. Right, this is a very important zone, and so we saw a retracement on Friday. We're very bullish, and then expansion upwards for Sunday, and retracement into this order block prior to market open. So what are we expecting? We're in a balanced price range. We know where the stops are, right? We have stops. We got 1, 2, 3. Let's actually use a brush. Where is it at? I'm sorry, I don't know where the brush is. Right, here's the brush, right? We have liquidities. We got failure swing 1, and we got failure swing 2, and then we have the actual liquidity, right? Let me do that. And this is market open. We know that we're rejecting off of this order block. We know that Sunday had quite the range, right? We came up, we tapped into liquidity, we came down, we tapped into liquidity, and WOG was already filled. No closes below. That's something to note. So now let's drop down to the 15-minute. All right. Okay. What do we see? Price comes down, bounces off this volume imbalance. Ooh, that's actually pretty nice. Okay, anyway. 9:30, we have this. This is low resistance liquidity, right? But what needs to happen in order for us to bounce and take it out first? We need a rebalance, right? There were really two things we could consider here. One, oh, actually, we have relative equal highs right here, right? Let's ignore this for now. Right, so this is our price target, and this is what we think price is going to hit. And then, as said before, we have low resistance liquidity. So what? There were really two possibilities, right? One, we come up immediately, tap into. I think I was anticipating a sweep of this, a tap into this, or actually, this is also unmitigated. There's multiple 15-minute FEGs that we could have come up and hit, right? We have all this. So again, two possibilities. 9:30 opening. I was honestly expecting price to immediately pierce through this liquidity, take out these relative equal highs, and then continue lower, eventually to perhaps this, right? Because as far as I'm concerned, this is low of week now. Oh, it's not low of week anymore. This was low of week at the time, right? But instead, what did we do? We came down. We didn't tap into this volume imbalance, but we did tap into the new week opening gap. That's what this is, right? New week opening gap. And this is also 15-minute FEG that was not pierced through. That's very important to note. So what do we do with this 15-minute FEG? We actually almost ended up touching CE, right? Look how close this is. That's our 15-minute. This is 9:30. 15-minute came down, tap CE. We can drop down to the 5-minute. See what really happened there. Okay. We're close to tapping into this FEG. As far as I'm concerned, it doesn't really matter because we were close anyway. We also tapped into the inverse FVG on the 5 minute. Again, touching CE, almost hitting the 1 minute. Oh, almost hitting the normal FVG rate. So what happens? Imagine market opens, comes up, and it jumps all the way down. Right? Let's take a look. Go to the 1 minute. Right? Alright, let's take a look. First of all, let's mark out this first FVG. This is the first FVG post 930. Very important level. Right, so what do we have here? We don't tap. That's important. This is the first tap. The tap into NWOG and the 15-minute FVG. We come up, we hit the 1 minute, the first FVG formed after 930, and then we come down. Come down. Pierce CE. Notice how we're constantly respecting both NWOG and the 15-minute FVG. Come up, up, down, up. And at this point, I don't really think there was a decent entry. Let me think what would have been a good entry here. Okay, let's go back. We knew our target, these relative equal highs that were left untouched. What would have been a good entry? It's possible we could have used an inversion fair value gap, right? Right, the second we inverse it, stops here, take profit up there, right? Not the best RR, but this would have been the dodgy setup. I'm trying to think, was there another way we could have narrowed this down? What time? Any time zones? Not really. Yes, we saw 10 o'clock take this out, but there's no significant PD array here. Let's think. This shift of structure, maintaining that structure. I guess could have taken the Crunk model, right? Got a breaker block. Oh, didn't mean to do that. Let me actually just get rid of this. You have the Crunk model, right? This is your 5 minute order block. This is your 1 minute breaker. There's your shift. Entry would have been. Entry would have been. Actually, hold on. Yeah, no. Entry would have been this, right? Turn off the magnet. Entry would have been this. Stops. Oh. Stops wouldn't have worked here. Why? What happens here? This is 9:45. Oh, 9:45 news. You know what? Okay, yeah, 9:45 news. So we would have let 9:45 play out first of all. Maybe even had buy stops or buys somewhere here. But, what would happen if we took this? No, not the best idea. But yeah, you can tell we pierced through this FEG, we ran. This would have been concerning, seeing this, right? Came up above 932 candle, didn't manage to close above this, and at that point, probably would have went shorts, right? However, we still know that this target is still up there, so. Okay. In my head, a low risk buy have been this, right? Because we have 945, we have all this being respected. Ooh, this is actually... Sorry. All this is low resistance liquidity, remember? Low resistance liquidity. Right? None of it is being ran. So a good entry would have been 946, the respect of this FVG. I dump down. Next minute comes down into this because we know that the 15-minute we opened here, right? This would have been a perfect OLHC, assuming the 15-minute ends up closing well. Yeah. Okay. So we come down, we soup this, and the instant we come back above this range, what you could have done was this. Targeting, relative equal highs. Oh, in this case, I'm gonna have to move it. Okay, so this could be a new concept. We're expecting a soup. We notice all this. So we set our stops below. The instant we come back up, we set our stops below. And in our case, it would have worked out beautifully because there's one, a clear draw, and two, respecting the NWOG and 15-minute FVG. Now let's take a look. 10 o'clock sees another tap into this little zone. Call it a rejection block. But I don't think that there was truly anything we could have done, right? I guess you could notice a reaction off liquidity, right? We're struggling to close above the 15-minute order block. Okay, 15-minute order block, right? You notice we're struggling. So what could have we done? Let's see if standard deviations could have worked out, actually. I think that'd be interesting, right? We take our fibs. Take this, your 1 to 1.5. We don't actually end up hitting anything. Right? Is that the smallest leg? Technically, yes, it is the smallest leg, but I guess you want to take the leg before the shift in structure. Nope, same thing. Nothing. Okay, so fibs would be utterly useless here. Sorry. Yeah, fibs are bullshit here. What the hell is going on? Okay, there we go. Right? But yeah, this wouldn't even have been a good trade. Again, maybe this IFVG play would have been the move. At least to those equal highs. I think that would have been the only play possible for that day. Yeah, that would have been the only play possible. And then we continue onwards, but that is a video for another time. Peace.